Hey everyone, and welcome back to the Your Money Your Life podcast with episode 283. Think about it, we've done 283 weeks of this podcast, which is a long time. So make sure you share this with your family and friends. You like, subscribe, 5-star rate, and review this podcast and share it with your family and friends. We're getting it out every week, roughly on Thursday morning. Today I am running behind schedule, a lot of stuff to do. It's July 4th weekend. We're in the holiday. It's July 4th weekend. We're celebrating July 4th. Everyone is, I assume. But before we get into July 4th celebrations and everyone's plans, let's first start with the market update. This has been, again, a resilient market year to date. Now, the SPY, the ETF that we are using, the Spider ETF that we are using to track the S&P 500, is showing 6% rise year to date, meaning it's up 6% this year. It was, again, we keep going back to saying people were not really freaking out, I would say, but apprehensive in that March, April timeframe, May, April timeframe. That's dissipated because we're up 6% year to date. Over a year time frame, we're up 14%. Over 5 years, we're up 2x your money, 100%. So, I mean, this is just, again, showing how resilient this market is. We're just seeing assets increase in value. Any assets, real estate assets, stock assets, everything is increasing in value in this inflationary period. What happens with inflation? Not only does prices go up, asset value goes up as well. So asset values have gone up significantly, and they will continue to go up significantly, especially with different spending initiatives the government's putting in place to increase money circulating through the system, and also to make prices go up as well as assets go up. And so that's something to note here is we're going to continue to see that, right? Like I don't see very many headwinds right now. Of course, things could pop up as far as headwinds for the market geopolitically. There's things that could pop up, for slowdown in tightening of the labor market. But right now, I mean, let's talk about those things. U.S. Vietnam trade deal hits China. Let's talk. I actually haven't even had a chance to debrief this article before talking to you guys about it, but a trade deal allowing American goods to enter Vietnam duty free will have implications for China. The U.S. has closed a loophole that allowed goods from nations, including China, to pass through Vietnam. They will now face a 40% tax, according to Bloomberg. This suggests a floor for trade negotiations with China, which would otherwise maintain a competitive manufacturing advantage and has been hit with tariffs ranging from 145% to the current 55%. Vietnamese products coming to the US will face a 20% tariff per the deal, which isn't yet finalized. So this is pretty much saying that goods that are coming through Vietnam, even if it's coming through China, will now be they will now face a 40% tax. So this is a good, again, the deals are getting done in the sense that, when these tariffs were put in place, people said deals had to be done for the market, for investors, for everyone to feel a little bit more comfortable going forward. And deals have been getting done. That's one thing you could say. This is another example of that. And so I'd say this with the market's digesting this information and is seemingly bullish on the fact that deals will be done, companies will adjust, and things will be good going forward. So that's one thing to note. Job market, the other side of things, the labor market. The US added surprise 147,000 jobs in June. The US added 147,000 jobs in June, the Bureau of Labor Statistics said Thursday, far more than the 110,000 expected. But just 74,000 of those jobs were in the private sector, the smallest number since October. While the unemployment rate fell to 4.1%, the labor force participation rate fell to 62.3%. That's the lowest level in nearly 3 years as more people looked for jobs. The surprisingly strong report released early due to the July 4th holiday may reduce the likelihood of a rate cut this month. So, um, jobs are still there. That's one thing. The Jews job report it reaffirmed that the job market continues to throttle back. Payroll employment increased, and so 75%, 73K increase in state and local government education jobs. So those are 73,000 increase in state and local government education. That's not a reality going forward. That's more of a seasonal adjustment due to school year. So it may not have been as strong as people think. This economist seems to think that the jobs report wasn't that strong. It was more of a seasonality thing with timing of the school year ending, and the fact that there was 73,000 jobs increase in state and local government. And as we said earlier in the article, there was only 74,000 jobs in the private sector added. So people are a little bit like worry about that. So this person say not only because of less labor demand, but also due to weak labor supply, labor force participation is falling. And given deportations, labor force has flatlined. So he's not as optimistic as the data, the headline data would suggest that we have more jobs, especially in June, than we did. So that's an interesting perspective. I would agree. If there is a seasonality aspect to this, then we have to watch closely the next jobs report for July to see if that's smoothed out and we have a tightening labor force. And this Mike Bell, the strategist, also said the U.S. labor market isn't as healthy as it looks. Have you ever sneezed while walking a tightrope? Stick with me. I'm not going to stick with you, Mark, Mike, whatever. But again, more same sentiment that it's not as nice as it look. We add a lot of seasonal jobs, and we're not as strong. So that's something to know. Like we have those two things that we are on a tightrope with: the labor market, inflation, cutting rates, the stock market in general. And so those things have to play a role in what's going forward. Beef prices spiked ahead of July 4th. So if you're planning to grill burgers on July 4th, take note. Beef prices are the highest in over a decade. 2 pounds of ground beef now cost $13.33, according to the American Farm Bureau Foundation. That's mainly because the American cattle supply is the lowest it's been in 75 years, following a serious drought in the heartland. The surging beef price of beef means a cookout for 10 costs an average $70 this year, up 19% from 5 years ago. That's interesting enough. The wife and I were actually just talking about cooking, grilling out, and it looks like the hamburger beef prices are up astounding this year. Again, I mean, I think all that stuff is you got to enjoy and take in the celebration of it all, and not worry too much. But it's an interesting article. It's just telling what inflation's doing. 5 years ago, remember COVID, what was roughly the start of it. 5 years ago now, that was the highest inflationary period we had in such a long time. So you have to have those things in mind, just at least a nostalgic sake, just to think about it. Think about Tesla. Tesla's future is murky as Musk pivots. Tesla made Elon Musk the world's richest person, but the CEO's focus on the next generation technology is complicating the embattled automaker's future. This is from the Wall Street Journal. The Tesla's quarterly sales fell 13.5% year over year. Congress is preparing to eliminate EV credits, and rivals like General Motors are producing high quality cars of their own, but must seize autonomous vehicles and humanoid robots as Tesla's core business moving forward. The risk is that roughly three-quarters of the company's 100 billion in revenue remains tied to selling cars. So he's saying, "Hey, I care more about autonomous vehicles. They just unveiled or they just launched in Austin, and I care more about these humanoid robots, which I don't think have launched yet." But he did say at one point, a Tesla car and a robot would cost roughly $70,000. One of the Tesla models and one of the robots. So I think the robots is going to be what, 30, $40,000 price tag to it. That's incredible. And so the whole pivot for him is saying we're now going to focus on robots and autonomous driving. Most people won't be driving. A lot of people think most people won't be driving in 5, 10 years. Like people that are just having kids now, your kids may not need a driver's license. They may not. Just if you think about Waymo, if you think about Tesla, all these different people that are launching, it's a lot of it on the West Coast. Hopefully they start to move their way east. Because I love that. I've driven and ridden in Waymo, and it's actually really, really great. I'm something that can do work on the run, do work on the go. Um, and so I think, these autonomous vehicles are going to become a much, much bigger part of our future than most people realize. Some people want to drive, but some people want to not drive. And so that's something to think about with Elon. As weird as he is, you definitely don't want. He does seem to figure out. He does seem to be good at predicting the future. So we'll see. I think I'm still bullish on Tesla as a company. So we'll see how that plays out in the very near future. We just talked about burgers and beef prices. I should have had this story with that, but July 4th is expected record travel. The gas prices, flights, domestic hotel rooms all cost less than they did last year, according to Reuters. About 72.2 million people will travel over 50 miles during an 8-day span, with about 1.3 million more Americans driving and 80,000 more flying to their destination than last year. So again, be safe on the roads. I think a lot of people are heading out, going different places. be safe on those roads. Because again, it's 4th of July, but you want to spend time with your family, but you want to do it in a safe and secure manner. What's not safe and secure is losing your job because Microsoft just laid off 9,000 employees. And they said the tech giant, they already carried out several rounds of layoffs this year, but the biggest in May affected more than 6,000 jobs. The cuts will impact less than 4% of the company's total workforce across a range of teams, geographies, and experience. Microsoft, LinkedIn's parent company, employed about 228,000 people as of June 2024 after laying off 10,000 a year earlier. So yeah, just Microsoft seems to be doing some reorganization, and that's what happens in big organizations. So you always want to keep your head on a swivel, I suppose, and just make sure that you're locked in and getting things done. Speaking of locked in and getting things done, in our roundtable today, I want to discuss how people set their goals and how people attack them. For me this year, I actually did something different. I have my own quarterly reviews because, of course, I work for myself and do everything on my own. So I have my own quarterly reviews to keep myself in line with what I'm trying to accomplish by year's end. And I think it's a great way to do for all the self-employed people out there, for all the owners, operators, people that work for themselves and do great things for themselves. Keep yourself accountable via quarterly reviews. Maybe you're already doing so. Write down those goals. And I have quarterly reviews. I have a calendar invite that gives me quarterly reviews, or a notification that I want to do a quarterly review to check out how well I'm doing so far this year. And so that's a good way to keep you on track and keep you motivated, to be honest. And you can also apply it to your personal financial life as well, right? Like savings goals, debt pay down goals, all these different things can be applied via quarterly review to ease off the pressure of thinking about it every day. You can maybe put a 3 month time frame on it, a half a year time frame on it, so that you have a little bit more breathing room to get things accomplished and not have to think about it and sulk on it every day. I think that's a great way to approach it. If you do approach it that way, let me know. Schedule update. We will be at the Freelancers Hub next week. I will be doing multiple um, Knowledge Hub consultations for people and a lot of freelancers. We have a lot of exciting things there. So make sure you check it out or pass it to your friends if they would like to attend and meet me there for really a free consultation and financial review. We're really going to make sure people are all set up as we move into summer, all set up with their lives financially, and they can rock out and have fun, enjoy the summer. You can see I've enjoyed the summer. Tanner, so with black people, we just call it darker. I'm darker. I'm out in the sun. I'm getting my walks in, my runs in. I am tanned up. All right, folks. So make sure you do the same. You enjoy your holiday weekend. Stay safe. We'll talk next week.